Hi, this is Finance and Investing Just Joey Style, and I'm going to show you a lot of mistakes. And what not to do. But also, it's so good, all the things that I've learned recently. And yeah, it's going to be really good. Now, I want to start off with this. So, if you're scared right now, I don't really know what the heck you're worried about because the MACD is way above the zero line. And this was April. This big giant rectangle right here, this was 6 months ago. The S&P 500 fell from 600 to 500. That's a huge drop. We had a correction. I don't know where people missed this, but we had it right here. 600 to 484. That's a crash. That's a stock market crash. We crashed in April. I didn't even know it. I didn't even think about it. What are people worried about? We had a stock market crash 6 months ago. The market cooled off. It's cooling off again and pulling back to the 50-day moving average. We got a little bit more pain for another week or two. Hold tight because we're gonna be soaring. I bet you any money. Now, it's not gonna be immediate. And yeah, I'm gonna show you right now. My account sucks. Look at this. 27 grand. Ouch. Ugh. And yeah, I still have call options open. And yes, Shades Trades is going to call me a idiot, and he's not entirely wrong. But I have to learn certain things, and I'm experimenting with some stuff, which has been great. But what people don't understand is how quickly things can turn around, especially in crypto. And there's a lot of extremely big things coming right around the corner. And we need to bring some daggone energy to this because everybody's ho hum and glum. Look, nobody can be more glum than me. Look at this year to date. I am down 50%, 55% down right now. And just 3 months ago, I was up 40%. So, I've learned some lessons here, but I have a long term pile of shares that I was never selling anyhow, and that's a big part of this. That stock dropped 50%. So this is just one company. Now, this is what you could look at if you just have one major company in your account. But I've also been leveraged and I didn't start really understanding what the heck a MACD long-term trend really meant until right around here. So I'm pretty new to understanding that, or I would have played this significantly different. But this has given me a lot of experience, and a lot of people would have turned tail and ran away, and nobody would show this on, especially on YouTube, because nobody's telling you how bad they are. Look at this. If I would have just decided now to put money somewhere, but you can't do that. That's the other thing people are going to do. Oh, they're going to go back to their account and go, oh man, why didn't I sell everything here? Because you didn't know. You had the information that you had then, and you had the knowledge that you had then. And so did I. And that's why I didn't sell. And then look, these were like freaking Fridays. They came back. I know what I'm in, but right now, nobody wants it. And it's the absolute best time to buy it. Now, to trade it, I've been trading it wrong, but it wasn't really a trade to start with because it's my long term shares. But my options were timed very badly. Anyhow, so I've started learning charts better, but I need to get better at execution. And then this helps give me a plan of what to do next time certain scenarios happen. Oh, absolutely. And it gives me a plan for anything else. But my plan is still intact. Now, yes, I should have dumped these call options, but it looked like we were bottoming. And by the time I really figured out probably shouldn't be in them, I can get them back later, or if we do bought them, I can buy them around the same ish price. So I've learned, and it's been very good. But my long-term positions are fine. Like I have, like this is the most incredible thing right here. This is what people don't see, and this is what people don't understand. And yes, at this current moment in time, it's bad. And a little bit of that is because of my leveraged options. I should be up higher because that was a semi-significant loss. Um, mm, right about 10 grand. But like I said, that's tuition. Yeah, it sucks to say that, but here we are. I won't do it again. But MSTR, let's check out the monthly chart on this thing because I'm telling you, watch this. And this is why Michael Saylor is calm as a cucumber. Like his stock just tanked 50%. You think my portfolio looks bad? His company just tanked 50%. But by saying it tanked 50%, 5 years ago, this was $13 a share. So even at this moment, that doesn't matter. And yeah, we have a death cross here. And apparently that was very apparent because it's honoring it right now. So, and I thought it was going to be a fluke. I was wrong. But this is the channel we got to break out of here that I've got this little trend line going down here. If we don't break above this, MSTR is still coming down. But this RSI is extremely oversold. And anytime that's happened, things have been pretty good throughout the history of this stock. But we got to get this trend line on the MACD going better. But anyhow, what I'm showing you here is the monthly. So these candles are 1 month time frames. Okay. I mean, look at these. This was a low of $99 to a high of 200. That's a double in a month. 106 to 173. That's like 60%, 70%. There's 74% in a month. There's another 60, 70% in a month. Look at this. I mean, 157 to 267. That's over $100. That's probably what, 75% rise. This month was huge. This was 220 low to 543 in a single month. So I'm trying to remember. I think this was the election. Yeah, this is when Trump got elected. It's because crypto went ballistic because he said that he was going to, help crypto actually do what crypto should be doing. Now this sucks, but that's the first time it's happened since the stock has been in Bitcoin, which is incredible too. So that's definitely concerning in the future. So I really got to figure out this, but we have crossed on the MACD and the 5's about to cross the 13, but it doesn't have to happen. That could be it. It's possible, but we can't ignore it either. Now, what I wanted to show you is how freaking much this stock can move. It can make $150 moves. It's proved it. Geez, look at this. There's a $100 move. There's a $100 move. I mean, it can move $100 in a single month. So that's why I'm not overly concerned with all this red. Like everybody's like, gee, Mini Christmas, you're the worst investor in the world. Not really. It's the timing sucks. But for the investing, well, trading, I'm getting better at that. But selling options, I'm going to show that in a second. What was I going to do? Oh, investing right there. I had 101 shares of MSTR back in March, at the end of March, beginning of April. And since then, I've gained 53 more shares, 53 and a half more shares. And that's how many shares I will have at my minimum forever. I want to get to 200 minimum. So think about it. When this stock gets back up, like in 2 months, this stock could be back up to $450. And that's not unrealistic for this company. So especially with some very good crypto news still right around the corner. And like I showed you on the SPY, what the heck are you guys worried about? This is a blip. Anyhow, but I'm very proud of this 153 shares. It doesn't look like it in my account, but guess what? In 2 or 3 months, I could be like, yeah, I know. I mean, it would have been nice to not have to go through that. And next time that I'm in this situation where it looks like there's a mega downtrend, I'll start, hedging better. That way my account doesn't do this and I have more opportunities. So I'm learning a lot, which is wonderful. And trading is difficult. And well, I'm investing in volatile things because I'm not investing for today. I'm investing for 5 years from now. And that's very important. And the lower this goes, and I can pick up shares now, this is $60 a share lower than I originally bought it for. This is wonderful for long term. It sucks for my account right now. And there's some things that have hit some prices. Like I got to put on SoundHound right now for 15. It was at 17 something when I sold that put, maybe in the high 16s. And boom, here we are. And then on the way in this little like spike down, I bought 40 shares. I don't know, it's $13, $14, somewhere in that area. But I'm going to swing this back up to 17 to 20. I'm going to start selling $17 covered calls on it. So when it hits, it hits. And then I'll put $17 limit orders or maybe 18. We'll see. I'll probably start selling $16 covered calls on it. Anyhow, I want to get back to long term. I picked up 45 shares of this, or I'm sorry, 40 shares of this. So I got 105 shares of this, and I'm just mentally keeping track of that because this is my account and I know what it is. Anyhow, SoFi, those are all long-term shares. Everything else is long-term shares except for HIMS right now. I picked up 125 shares of this that I'm going to swing, and I'm trying. Let's see here. Well, I'll show you. Maybe. All right. I should have rolled down my covered calls, but I made $190 this week. I think it was. This says 19. Why do I only have 19? I don't remember. Anyhow, I know it was way more. Oh, that's because I bought it back earlier. Never mind. Ignore that. I think I sold 2. So yeah, I made about $160, $180. I gotta start tracking my trades better, and I don't, and I need to be more diligent at that. That way I can understand exactly fully what's going on in my account. And I don't mind that I'm down on sound or HIMS because it's long term, and I've just been picking up long term shares. But I bought. Where are we at? There it is. One contract. That's the contract. So I made $19 selling the $50 covered call, which I thought HIMS was going to stabilize a little bit more because we were at like 46, and it's volatile. But when I saw the decline, I should have rolled my covered call down. But there's a lot you got to, there's a lot to think about. So I got to be better micromanaging the smaller ones, or stay away from that. What I'm going to start doing is only trading like 4 different companies. That way I'm not all over the place, and searching for plays. But it's nice when I tell other people what to do. It's strictly data, and no, this is what the chart's saying. This is what this is saying. Like I called the top on Mara like perfectly. I told my buddy to sell it 23, 22, whatever the heck it was. And I told him he could get back in at 19. Now, yeah, but he saved himself $4 a share and bought all that back. So on the run again, at least he's still up and he has more shares. So it's been good. I know what I'm talking about, but I'm experimenting with some things. And yes, this is, you know, long-term needed money, but like I said, my entire thesis is MSTR. But anyhow, back to him. Sorry, I drifted for a second. I bought 25 shares at $40.95, and I think I bought my 100 shares at 46. So I should have. No, I think I did do the chart. I'll have to go into the chart right now, and actually, we're going to figure this out together. Um, that's why, transparency. People are not showing this stuff, especially the bad. People are not going to show you the bad, and I'm going to show you the bad because I have a long-term plan. So even the bad right now, I'm telling you, in a couple months, probably within 6 months, we're going to be. My account's going to be fine. Geez, my account's probably going to be over 100 grand. But that's a guess. Um, there's a lot of stuff coming. But right here, so about 40.95, and then I bought 100 shares right here at 46.19. So I probably have I can figure it out. That gives me like a $44, $45 average, something like that. That's okay because first stop on HIMS for me is back at 50. Now, I'd like to start selling covered calls a bit lower, but I don't want to sell them lower than my cost basis because HIMS is volatile. And it's at a very nice support zone. It's at the 200-day moving average. I drew a box on this, a couple of weeks back. It's in a good place. I don't think it's going to drop below here, and it had great earnings. And yes, if we pull back a little bit, I don't know. I wouldn't set stop losses right now, actually, because especially when I just looked at that SPY chart when we crashed and had the worst fear I'd ever seen in the market. And now we're back in the low 20s on both crypto and stock market fear gauges. Come on. It's Q4. They're going to start printing money. Yeah, Jerome Powell was hawkish a little bit. He just said, we're not sure what the heck's going to go on in December. And I told people that. And here we are. And I didn't fully play the downside. Like I can see it, but the execution is tough. But I can tell somebody else to do that because it's data and numbers in somebody else's here. This is exactly what you need to do. Anyhow, but we've got a lot of really good things coming. They already said they're going to start printing money. Ethereum's getting an upgrade. We got the Clarity Act. Yeah, I know the government shut down, but I know that Cynthia Lummis is running around trying to get stuff done. There's still some people that get paid. I don't remember who all gets paid, but it doesn't matter. But that's still getting done. So crypto's good. Now back to HIMS. I know I'm jumping around. My fault. But yeah, this trade's going to be back to $50 minimum. Minimum for a short-term trade. This is probably going to take maybe a month, depending on how long it takes for the market to turn around. But when the government opens back up, and this has been such a rare year. So I've talked to a few people, and the crypto market, the stock market, expert traders, people that have been doing this stuff for a while, they said this has been a very difficult time to navigate the markets in the last month or two. So I'm very impressed with myself that I'm still here because there's several people that thought I got liquidated weeks ago and I'm still alive. So, and I still have a plan that's coming together. But anyhow, my thesis is long term. It's really going to take 2 years for you to understand what this account is going to do. And yes, I have made some mistakes, but I'm getting better and making less, and I'm getting better at taking advice from people that know more things than I do about, well, things that I don't know. Um, anyhow, so this is going to be a $50 minimum trade, and then 60 is what I'm probably going to hold for all of it. Where we got hymns. Not the monthly. Yeah, the monthly looks like garbage too. Uh, weekly's bad. Where are we at? We're below the 50 on the weekly. Not good. But like I said, I need something to drink. We're at the 200. This company hasn't spent much time under the 200-day moving average. Right there, it hit it. And like I said, I don't see the reason for this ridiculous amount of fear. Like, I mean, yeah, stocks are overvalued right now, which doesn't make much sense because all the companies are just blowing through earnings because, yeah, but there are some concerns because people are losing their jobs because big companies don't need all these people because AI can do their job. So that's concerning. So I mean, it sucks to see that, but AI is doing so incredibly well that people are concerned that it's a bubble. It's not. It's technology. It's a shift in technology. Now, there might be some bubbles created, but this is not particularly a bubble. Anyhow, back to hymns. Uh, yeah, man, we're right at that support. I mean, we've bounced below before. I mean, we can jag down for a couple days, and I'm not trying to ignore the bearish because I'm calculating, MACD. MACD is just a slightly lower than it was here. So that's important. But one tick, I mean, we're like right there on the histogram, pretty much at the same level. So I'm not doing anything right now. Although I do think we're going to have another week or so of downside. So I'm trying to figure that out. So I'm done buying anything. I don't really have a lot of money to work with, so I'm going to wait for trades to come back up because I'm in my plays for a reason. And these are 6-month holds. And then obviously long-term shares. Anyhow, what was I going to show you? Oh, I want to show you how I play options. Now it's completely different than when I look for. So let's see. Let me show you this. See these charts? This is the daily. So this kind of helps you navigate a little bit. See, here we are. Now we could freaking go sideways for a week like we did here. I mean, this looks pretty familiar. But man, if we zoom out, ooh, uh-oh. If I zoom out, I might be slightly wrong. This kind of looks like a giant head and shoulders pattern on the daily. Or like shoulder, head, I don't know. It looks more like consolidation to me. Almost head and shoulders, but nah. Yeah, we're good. That's consolidation, not head and shoulders. I was almost very concerned for a second, but that head's not big enough right there. So, yeah, I think we're good. We had it here. This is a pretty solid area of support. Like I said, we can drop quickly and then pop right back up. So I wouldn't be setting a stop loss because I think we're coming into the slightly consolidation phase and we're already into the longest shutdown in history for the government. And that's going to be one of the big things that's because there's just uncertainty out there. Like people just don't know what's going on. So they don't want to put their money there. But we're not going to have a crash, but because we've had amazing earnings. And people aren't going to pull out either, especially in these lows. We've weeded people out. So right here, like I said, this is the time that nobody wants to buy anything. This is the time that everybody's terrified, that everybody's scared, and they don't know what to do. And everybody wants to sell because their account looks like crap. Well, guess what? This morning, I lost $5,000 today. So that's rough. That's rough to see, but I know what kind of an account that I'm in. I know what kind of plays that I'm in. I know what kind of volatility I'm in, and I'm also leveraged. So my account is going to swing drastically more. It's fine. It's fine with me. It's really no different than someone holding a long-term share or a long-term trade that's down maybe, I don't know, 10 or 15% because of the leverage. Anyhow, like I said, in 3 or 6 months, I'm more than likely going to be fine, and it's going to be fun. Anyhow, but yeah, consolidation phase right here. That's a pretty big box, and this is all year long. Well, this is since May. So that's a pretty strong trend. I'm 6 months, and we slightly broken out of it, and for what? Because the government doesn't know what they're doing? Since when have they ever known what they're doing? You know? I mean, come on. It's time to buy. It's time to buy. We had a crash 6 months ago. We're not gonna crash again. We just needed to cool off because people don't understand AI. Yeah. And I'll be right back. I gotta pee. Okay, I'm back. Now, I was just thinking about it. Yeah, I think about stocks a lot because I like it. I was just, what the heck was I just thinking about? Anyhow, I was thinking about Shades because, well, he hates hymns, but he knows it's in a good buy zone too. Um, but we can't think about hymns as healthcare. Hymns is subscription. Think of hymns as like Netflix 10 years ago. But we are on an exponential path between money printing. I mean, the government literally said we're going to print money again in December. We're a month away from they're printing money, but I mean, they're not going to actually print money because everything's digital. They're just going to open up more credit and all this happy stuff. It's make it more fake. That's why things are going to continuously go higher. And with AI and crypto and just technology, that's exponential. And people don't understand exponential. And I'll show you what exponential is. Maybe if it pulls it up. There we go. So interest rate doesn't really matter what the interest rate is. Let's just go the standard 10%. Let's say someone was putting 120 bucks in there and they had $40,000 to invest. Oh, wait a minute. This is only 5 years. I'm explaining exponential. So, okay. This is what exponential growth looks like. It's compounding. Now, it takes time for this to happen. But this is what I'm getting at. Okay. Tech. Now, this is 10% a year. Okay. What I'm going to show you is going to blow your flipping mind. So after 30 years, this compounding curve drastically takes an upward turn. Like it almost goes straight up from here because it's exponential. And this is what you need to understand about how technology is going to grow off of itself. It's not linear. It's not just addition. It's not a stack. Oh, it's so much more powerful. Um, so between AI, crypto, technology, super technology, and then AI literally being able to learn off of AI, yeah, it's still going to take some time for this to play out. And there's going to be some big swings. It's going to be incredible to watch. It's going to be scary and wonderful at the same time. But anyhow, so when tech merges with tech and starts learning off of other tech, it can learn so much faster. It can just grab information at the speed of light. And it's all, but as long as, here's the problem though, with crypto, all of the information in crypto is trust, especially like Bitcoin, Ethereum, the blocks. That's all trust. But I don't know about AI. AI is just what it's taught. So it can just kind of, it's going to be interesting to see how we can contain it. But anyhow, let's get back to this. So super tech is going to go. So I'm going to show you this in numbers. And I'm going to compare it to the amount of growth that tech is going to experience in the next 5 or 10 years. This is a 30-year period. This is a contribution of $120 a month. Actually, you know what? I'm going to take this contribution rate completely out. We're going to go with 0. You're not even going to add money to this. So I'm going to take that factor completely out of there. Okay. And that drops this number. So let's just call this $700,000 over a 30-year period. If you put $40,000 into the stock market 30 years ago, it would be worth $700,000 right now because of how much it has returned year over year. That's how that works. So now we're at this mark. What we're going to do now that we have super tech, this interest rate is going to increase drastically because tech is going to grow off of tech. And I would say at a minimum of 2.5 times. And we're going to go just 10 years from here because this is what we have now. And this is where we are. Because about 30 years ago, tech really started to be born. The internet, I mean, cell phones aren't quite 30 years old. Maybe the first one, but like the modern ones. So in just 10 years, if we 2.5 times the rate and go from here, this money, no, that didn't make any sense. Ah, shoot, sorry, hold on. I forgot to change the melodramatic. Dun, dun, dun. I messed it up. So it was 700,000. What? That doesn't make any sense. Jeez. 700,000 if I put the right, messed it up again. There we go. So in the next 10 years, your $700,000 would turn into 6.5 million. Okay. So over a 40-year period of time, you would have $6.5 million, right? No. But because the interest rate changed. And I'll show you what the original $40,000 would have been at the original 10% for 40 years. Oops. Forgot to change the years. 40 years. It would have been 1.8 million. But the other way, we ended up with 6.5 million. We ended up with 4 times more money because the interest rate grew. So I'm representing in dollars. Now, this is also how the stock market works. The money that you put in there, if you can increase the interest rate or rate of return. So a better company that can grow more rapidly than 10% a year. Um, you can grow your wealth this way, but I'm representing this in how much tech is going to grow from here and how quickly it's going to happen. So over 30 years, tech went from 40 grand to 700 grand. I'm sorry, 30 years. But then over the next 10 years, it went from 700 grand to 6.5 million. That's what exponential growth is. So that's what's going to happen between AI and crypto. So let's go back to my account. Where is the freaking, what the heck is going on? There we go. Exponential growth. So, yes, when a stock trends downward and you have more shares, so that's where my thesis of ownership, the more ownership you have, when a stock moves a dollar and you own one share, you make a dollar. But if you own 100 shares, the exact same move, you make $100. So the same move is 100 times more effective. So the more shares you have, the better in good, solid companies. And yes, MSTR is an amazingly solid company, and it'll be well over $1,000 a share within, I don't know, 1 or 2 years, probably. Um, once people really start to understand what it is, because they just don't. But anyhow, I just showed you exponential growth, and AI is going to feed all this. Michael Saylor is using AI to create his products. I'm sure I would assume SoFi is using AI. I haven't looked into it. I got to look into that more. But Palantir is nothing but AI. Hims, oh my gosh, they're the best technology subscription based company in the world. They're gonna take off. And healthcare is needed, and what they're doing is wonderful. AMD, AMD is going to well outpace NVIDIA because people don't realize how small AMD is compared to NVIDIA. And there's going to become a time. NVIDIA is a $5 trillion company. Let's think about this real fast. NVIDIA is a $5 trillion company. Well, it might not be now. Okay, it came back to four. I'm sorry, it lost $400 billion in the last couple of days, but it was 5 trillion. You saw it on the screen. $5 trillion. It was a fifth of the price of gold. One company was worth a fifth of the entire world's gold. There's a point when NVIDIA is going to get too big and people are going to see that. Where are we at here? Where's AMD? It's down here on the list. Somewhere around 400. I think it's somewhere around 400. There it is. AMD. AMD's 38, and AMD has some amazing chips. AI, they've got chips that NVIDIA doesn't have. I mean, they're going to get a big part of this market share, and NVIDIA has grown so much that something else has to take over some of the market share because there's just going to be people that are going to go, this company is too dang big. Now, they need to be that big, and they're not going to just like drop like a rock, but I'm telling you that there's going to be other companies that take market share from them. And NVIDIA is still going to do well. I'm not knocking NVIDIA at all. It's an amazing company. Obviously, there's a reason it's number one. There's an absolute reason it's number one. But I'm telling you, if you need growth, AMD is your choice. AMD can 10x from here. We're talking $2,400 a share and still be a $500 million smaller than NVIDIA is right now. AMD has excessive growth potential. Buy it. And it was $75 6 months ago. It's tripled since then, and it's still a good buy. I mean, think about that. It was basically about 125 billion company 6 months ago. People are starting to understand what this is. So if you're scared right now, look at the market cap of AMD. What are you scared about? The market cap of AMD has tripled. And it's a huge company. So like a Palantir, it's almost a half a trillion. That's a huge company. And yes, that company has 10x growth from here. How long? Like I said, these are in exponential growth stages. I don't know. I just showed you how much things can move in 10 years as opposed to 30 if you change the interest rate. What if I got the interest rate wrong? What if AI grows off of AI even faster than I thought it would originally? Let's go back to these numbers. What if it triples? I don't know. I just need the number again. I couldn't remember it. That's right, 700,000 over the next 10 years. And instead of 25%, maybe I'm off by just even 5% annually. Instead of 6.5 million, we're at 9.6 million. So literally, if you're off by 5% growth year over year, you're 50% off. It's 50% higher. I'm telling you, AI and tech, it's just going to grow. It's going to be insane. So this dip, I don't give a crap. Sell your grandmother. Buy it. Buy your best companies that are fundamentally sound. Like, just do it. AMD is a spectacular company. Palantir is a spectacular company. SoFi, wonderful company. It's at $27 now. That's wonderful. That's a great entry for this. Let's chart it out real quick. Oh, I think I did show. I want to show you how I do options. Oh, SoFi. Yeah, this is wonderful. And my covered calls did great. And we're at the 50-day moving average on this strong freaking company. Now, we did cross. Now, we could have, we've crossed before and just kind of consolidated. Cross doesn't mean end of world because we just crossed. But still concerned. That doesn't mean just you want to buy some shares now because it was at 33. Okay. But don't go all in. We could maybe drop a little bit more if we drop outside of this 25. Wait till 25. But yeah, wow, that's a big candle. Now the 5 did cross the 13, but that's a big candle ripping that down instead of a trend. So I wouldn't trust that fully. Like I said, I think we are bottoming. And people are scared. There's nothing to be scared about. This is a buying opportunity. Look, Tesla's at 450. What was Tesla 6 months ago? Where are we at? This is June. This is March. They were 250 in March. I was looking at them in 300. Now look at them. 50% up. 50% up. Don't ignore these big companies. Tesla is up 50% since July. What are people worried about? Because companies are doing better because of new technology? That's what you're scared of? Don't get me wrong. I am terrible at playing the upside because we don't know where we're going. So I don't really know how to play from here because we're in somewhat price discovery mode once we get above, what are we at? Almost 500. And once we do that, we're going to soar. But yeah, look, we're getting some steam back on the RSI. We come down we've cooled off, but we're still above the zero line. We got strength here. I don't know. I'm not concerned. Yeah, we could definitely change, immediately. Like something really bad can happen. We've already had a black swan. I mean, the government shutting down and China trade, like, but yeah, we're good. Oh, there it is. I called it. I'm just saying. I'm just saying. There it is. I freaking charted this out weeks ago or 2 weeks ago. I don't even know how long. I said it. I said this is coming down to $45. There it is. Wow. That's crazy. Yeah, there it is. I called it. I'm not in it. I wasn't in the play. But my gosh, I called it. I should have played it. I should have bought a freaking put. I called this right around here. 60, $70. I called it. I told the Discord, I told Shade's Discord, I said, this is probably going to come down to $45. And we're here. We're at 48. We're at 48.50. I know what I'm talking about most of the time. I'm just not very good at the execution in my own account. And I'm telling you, this is a bottom. I can't predict it immediately. I don't know. I don't follow Meta. Like right now, Meta is kind of in a free fall. I wouldn't, but RSI is oversold. Like, man, when you're down that far on the RSI, especially that fast, I mean, come on, we're at 25. And don't get me wrong. Well, we got support right here. Look at us. We're pretty much right there at that old high. That can act as support. 625. And yeah, I think now you have to be careful when you're trading to be predictive even past the charts because we haven't confirmed anything yet. Nothing says that this is coming back up. But there's a couple things that are telling me that it's not coming that much farther down. So there might not be upside immediately, but I don't think we got a whole lot more downside coming. Like I said, we're right in this area of 600. We could come to 600. I'll give you 600. Load up on puts at 600 on Meta. Not financial advice. Like I said, don't sue me. I'm not a financial advisor. I give financial guidance. This is what I do. If you want to do what I do, great. You want to ask me questions, I'll give you guidance, but you make the decisions in your own daggone account. Because that's what accountability and responsibility is. So I gotta, it's almost 6. I gotta clean my apartment. That's what I was gonna do, but then I was like, I gotta make a video. It's a little longer than I wanted it to be, but we gotta look stuff. There, holy crap! I'm freaking. Firm is weird, man. Firm is such a weird stock. And look at it. Oh, it might have reported earnings. I don't follow it, but I knew that it was getting into the point where it was going to be a buy. And look at us. After hours. It was 65 at the close today, and now it's at 74. Now I don't know what it's going to do tomorrow. It'll probably maybe shoot up a little bit more and then come down. But it looks like it's going up. And right off the 200-day moving average. We got a lot of stuff at the 200. We got a lot of stuff at the 200. A lot of stuff at the 200. Okay? And I need to start playing the downside better. Like I need to start buying puts. Well, or maybe shorting. Playing my covered calls better. Look, BMNR right here. When BMNR broke this and came back down, this candle right here told me to get out. The only thing that would have saved is right here. I thought when we bounced here, now it was close. I thought when we bounced here, we were going to consolidate because of this support. Well, I guess that didn't make any sense. We did close above it though, but we didn't even cross over. That's a really weak move. I even have it circled. So I got to pay attention to my own signs a little bit better because yeah, this is the time to make this. Thank you, Shades. I understand a lot better now, but I still don't like to trade options on candles. Okay, so I'm going to show you something now. If I'm buying an option, sure, I'll trade options on candles to some degree. But I need to be better at reading candles, so I can't. I trade a line chart better because I'm not good at reading candles. What was I just going to do? But now BMNR is definitely a buy. The sucky thing is I had my options from here to here. I still have them. And now we're bottoming because we're going to hit this support. So what I should have done was pulled out. That's what I didn't do. I didn't chart this out because I was bull. I'm still bullish. I'm very bullish. So yes, it's very difficult to have a longer term. Man, sorry. I'm trying to get this. It's better. But right here, when that support didn't hold, that should have told me I would probably maybe bought back into my options. Good place to buy back in. And then when it fell and when we broke, so like right here, I probably would have gotten back out because that would have confirmed get the heck out. And then, yeah, next day I would have been like questioning my decision, but we're still under the 5. And then here we go. There's a big downward move. Like nothing told you to get back in, and we're not oversold yet. So yeah, everything still said bearish. Even, I mean, here was a crucial place. This was, and then we closed that far below the 50. Right there, that candle should have told me to get out. I don't know what that candle means, but now that I'm looking at this, that candle should have told me to get the heck out for sure. I mean, at the 50, you can kind of give that like that big spike down. Like, all right, we'll figure this out. But yeah, that candle right there should have told me to get out. And then I could have saved, geez, $6 a share, 15%, and that's even more on options. So I could have taken some profits, or even potentially even got more options in, and I still wouldn't have bought back in. And maybe I set a limit order on them because I know they're probably coming down to 35 here, maybe 32. But I think we're going to bounce off the 200. But that's really hard to say right now because this company's not even around for, not even a whole year yet. Anyhow, so the 200, don't fully trust it, but it's still going to act as some support. Plus, it's coming right on some support anyhow. So we could even blow it down below it a little bit. That's what I'm seeing there. Google's a great company. Buy it long term. Oh, yeah, there it is. Hold on. Hood's at a buy. I think there's a guy that's waiting for that. And Google right now doesn't look. Oh, geez, Google's way overbought. Google's going to be coming down probably somewhat soon. Or, you know what? No, it's got to cool off a little bit somewhere, but it doesn't have to right now. Look at this. I mean, we got up to a freaking 88 on the RSI, ran a little bit more, consolidated, cooled off. We enter a consolidation phase. I think we could still, we're 73. We're cooled off from here with another leg up. If we come down into the 60s, 50s, and consolidate for a couple days, that's strong. That's real strong. But Hood's a good buy. I think I had drew a box maybe around 110 to 120. We're down below the 50. This could fall. Ooh. Hood looks like Hood is not a buy just yet. Hood's going to fall further. Wait till 120, 110, 120. We're probably going to have a bounce off of here, but we didn't touch the Bollinger Band yet. And the 5 just crossed the 13. This is bearish as heck. We might have a bounce. Hood's coming down. Hood's coming down, and it's going to do it over the next probably 2 or 3 weeks. But we're in such a weird place. Like I said, government opens back up. I'd set some limit orders, though. I'd set some limit orders for 120. Ooh, I don't know. We'll see. That's going to be interesting. But yeah, I think it might come down more. I think Bitcoin actually held up. You know, for as bad of a sell-off as we had in the market today, the crypto market, the fear and greed indicator, I believe, got better. Yeah, yesterday it was at 20. Now it's at 24. The stock market got a little bit worse. And yesterday, yeah, it's ticking down. So guess what, fellas? Yeah, we might have a little bit more downside, but it's time to buy. Ladies, fellas, whoever you are, whatever. Okay, but I want to show you the charts that I use options on. Oops, too far. Let's go with something a little bit sensible. Like SoFi is becoming a more balanced company, and it might even come down to about 25 bucks. But it had a nice epic run, and that's the part that I don't know how to play in like trading. Like it did have a nice run, but how far is this thing going to come back down? Because it would be really nice to sell, close-ish. Because I mean that's a 10% drop right there from 30 to 27. That'd be nice to save at least half of that. Anyhow, but that's hard to see. But these are the charts that I use for selling an option. So if I'm going to sell an option, I'm going to be simple. I'm going to look at the 1 month chart. That's it. I think I covered this actually, but I'm going to cover it again. Right there. I mean, the Bollinger Bands are telling me 25 to 32. So there's your options range. So if you want to buy this, the Bollinger Bands are telling us roughly in the next week, over the next month, this is the expected range for this stock. And we're at the 50. So I kind of expect this solid company to stay here, but we have crossed under. Well, we didn't really ever cross over. And I guess we did. But we crossed under pretty big red candle, pretty big red day at the 50 support. Yeah, we might touch in the 25, 26 range, but I don't know. SoFi is looking pretty okay. So I would definitely sell 25 even $26, $27 puts on this weekly. It's a good, solid company. Now, that's how I look at this long term. Make some money. It comes down. It's fine. Whatever. 25. Next week, you get it. And then when we come out of this bull crap, you're going to be happy. Or you don't even pick up anything and we actually start selling some. You know what? That's what I'm going to do. Now I'm discussing this. This is how I should do this more often. Just put it out there. I'm going to sell more aggressive covered calls. I'm going to start selling 28 to $30 covered calls. Let's go in here and then I'll chart it out a little bit more. So my covered call plan for SoFi as of right now is going to be weekly. I'm going to wait to see what we do tomorrow. And then I'll roll a covered call somewhere because I got a 2-week out one. I think it 31. We're not getting anywhere 31, so I'm going to roll this thing down. Or I might even just roll it down for the same expiration date. Back up to even 30. And since we have ticked down and we do have some fear still, and we don't know when we're coming out of this, got a cross under and 5 crossing the 13. This is probably going to consolidate somewhere in this area. So even if I sell my shares at 30, I'm okay with that because I can probably pick them up between 28 and 29. Yeah. I mean, this thing takes a little bit of time. I mean, this is August. I mean, $23 to 30 from August. So, I mean, that's what, 2 months? Yeah. So this takes 2 months to make that move. You got time. Play it. Play the short-term volatility. Play the at-the-money puts. Play it in support. Sell $26, $27 puts on this thing, and then sell $28, $29 covered calls. There you go. And you're going to make a boatload of money. Let's see here. Let's get out of this. Let's go to the options. And SoFi is a good company. Now it's going to be susceptible to some downside when we get there, but it's got decent premiums. Implied volatility is high, but we just had earnings. So these are going to be a little off right now. So I don't know what we're going to drop this down to. Probably somewhere between 70 and 80. So the premiums are going to drop. I mean, I don't know how that entire calculation works. So, but I'd cut them probably by 25% anyhow. So these things are going to be worth, I don't know, 30, 35 bucks at the money. Selling $29 covered calls for next week. So 1 week, we're looking at 29 bucks, even 30. That's pretty safe. 30 is safe. 30 is pretty safe right now. So you want to make a little bit more money? $55 a contract. So even if you want to go 30 grand, I mean, SoFi is a great company. You might have some downside, and then you can sell even more covered calls to boost that, or even play some puts on the way down if it's going to fall. But you could have a $30,000 account and buy 1,000 shares of SoundHound or SoFi and make $500 a week. Now, I think C implied volatility is down. So that's a true implied volatility, and that's playing a good chart. That's a 30 delta, which is solid. 20 deltas are safe, but $360 a week on 30 grand. No, I'm sorry, 27,380. Hey, that's an extra what? $1,400 a month. If you got 30 grand around, you can bring $1,400 a month into your house. playing solid covered calls on SoFi, and SoFi isn't one of those companies that just freaking goes ballistically insane, but it does have enough volatility to where you can make some decent income off of it. So if you need $1,400 a month and you got 30 grand laying around, now I'm not saying you're going to get that every single week, and then you can play monthly. So let's check that out. Let's play a little longer term. You buy 100 shares of it. Well, I'm sorry, 1,000 shares of it, and then we play the 30s. Now a month out, I'd go a little safer. I'd probably be playing the 31, 32s. Like I said, this is still somewhat of a slow mover, but yeah, I'd be in this area. If I'm playing weeklies there, weeklies are paying way more premium though. Look at that. But this is for people that don't, if you don't have anything to do, you want to make an extra $680 a month. Yeah, SoFi is probably not going to break all-time highs in the next 29 days. I'd be kind of shocked if it did. So you can make $520 a month on 300 shares, and that's pretty far away. That's a 20 delta. That's safe. 30 deltas are usually, where you kind of go. That's like your sweet spot. You're going to make it like 8 out of 10 times. Well, technically 7 out of 10 times. But that's pretty good odds. Plus, you're making income along the way. And then we're going to be somewhat of it's not like we just go straight up forever. SoFi comes back down, we can get back in. I don't have enough balls to sell my entire lot here. I knew we were coming down a little bit, but that's also the long-term discipline. Now, I need to start maybe trimming 5 or 10% when I see a downturn and then pick it back up. But we'll see. Anyhow, this is what I'm seeing out here. This is what my account's doing. And yeah, I explained it earlier why I do what I do and why my account is what it is and why I'm not out of my options. I should have got out of them and I should have studied my charts a little bit better and I didn't. So shame on me. But I also am very new to trading. And like I said, it's been a difficult 2 months to trade. It's been hard to predict. Now the downside's been there, but yeah, I don't think a lot of people saw this little dip coming. And literally 4 freaking weeks ago, we were ready to blow. We were ready. And then we weren't. And I didn't deleverage. That was not smart. So look at that. Big old learning lesson there. And that's something I'm teaching everybody. This is my journey. This is something that nobody else is doing, especially at my level. And I know what I'm talking about. Like I said, it's going to take 2 years for this plan to really show you what's going on. Like some people are going to freaking crap their pants, especially if I get myself, even if I'm right here. So let's do some real quick math. We'll even pull my calculator up so you can see it on the screen. That's a really big calculator. I don't have a mouse. I'm just using my laptop, so it's kind of annoying. Anyhow, so I do believe that MSTR, now it's going to take a little while. Maybe it takes a year, maybe it takes 2, maybe it takes 5. I'm not sure. MSTR is probably going to be, well, in 5 years, we're going to be further than I think most people think. But 2 or 3 years, this is going to be well over $1,000 a share. And well, on a hype cycle, we can move. I missed the hype cycle and I should have taken profits, but here we are again. This is what my account's going to look like when this stock even just hits $1,000 a share, which isn't unheard of, especially as Bitcoin rises. And that's just going to inevitably happen. 153 shares times 1,000. It's pretty simple. It's 153,000. So my account is at $27,000 right now. Within 2 years, it can be 6 times that and double what it was at its height just from MSTR. And then I also have that much margin to use. So as MSTR grows, this is my entire plan, and this is why MSTR is my biggest company. Now I'm kind of thinking about it. Now I've already started positions, so I'm not going to sell those off, but I'd like to kind of sell everything off, put everything in MSTR right now, just because it's so there, because I know it's going to be very, very big one day. But that's stupid. Anyhow, just like to play. As MSTR grows, so does my reserve money, to where I don't have to put, I can use somebody else's money. It's loan money, my margin. So the more shares of MSTR I have, and then the more stable of a company, instead of, now it's still going to follow Bitcoin, but it's becoming more reputable of a company. It has a credit rating. That's incredible. It was rated by the S&P 5. It was rated it was rated by the S&P. And they gave it a B- credit rating. That's huge for this world. In a Bitcoin world, a pure Bitcoin company is rated by the S&P. Think about that. That's magnitude. Yeah. That really takes 2 or 3 years to set in. But I'm telling you, you're idiotic for not picking shares up now. But it was also idiotic. No, I learned the trade. So anyhow, I'm learning, and I'm very happy. I'm very proud of myself for how I'm managing my account and sticking to what I know. And yeah, my fundamentals for MSTR just keep going up, but the price just keeps going down. So there are some very powerful things in technicals, but some technical traders don't understand the long-term power of ownership. In the short term, yeah, I'm getting butchered, but like I said, give me 6 months, 2 years, and this account's going to look really, really good. But yeah, and then as these companies grow as well over that time, it's going to add to my marginable money as well. So that's the whole point. I think that MSTR is going to be the biggest growth of them. Well, actually, HIMS is probably going to grow. HIMS and SoundHound they have the most growth potential because they're the smallest. But and so does AMD. Like, people don't realize how small AMD is. They all do. Palantir, this is a growth portfolio, the whole thing. BMNR, yeah, that's Ethereum. It's Ethereum based. This is all growth. And I'm telling you, in 2 or 3 years, this is going to go ballistic. This is going to be a very sizable account, several $100,000. If I trade better, potentially a couple mil or into a mil. But yeah, this is the whole point of this journey. And I know these get a little bit long, and yeah, I got to start making some food. I got to actually clean my apartment up, and now it's dark and I don't want to do anything, but here we are. But yeah, this is what I do. This is why I do it. And yeah, I know what good companies are. But I'm a growth person. That's what I see. That's what I know. And it takes really 2 years to really kind of figure out what it is my mind is seeing. It's a very long-term thing. It's strategy. It's a long-term strategy. But I got all these short-term things buzzing in my ear, and I'm letting it affect my strategy. And some of it should, but the smaller ends of it, like the leverage side of it. But yeah, my long-term strategy is fine. So my account, even though it looks like garbage, I'm telling you, in just a few months, it's going to be fine. I'm just mad that I haven't made more off the downside, because I'm good at it. Like I said, I remember this conversation, and he freaked out. So I'm going to actually tell him about it. Anyhow, all right. This is Finance and Investing, just Joey style. And that's what I got for you. That's what's going on in my account. Don't do this alone. Like, ask questions. Seriously. I mean, I'm showing you the mistakes. I'm showing you what not to do. I'm showing you the things that you should pay attention to. And I'm showing myself and I'm putting it out there for the daggone world. Nobody else is doing that. Nobody's going to throw their dirty laundry out there. That's just how transparent it is. This is that's what I'm going to do. And my plan is going to work. So this is Finance and Investing Just Joey style. Yeah, my advice, my guidance. Sorry, I don't give advice. I give guidance. My guidance is wonderful. My execution in my own account, I'm working on that. So, and you're going to see that really take off over the next couple of years. So, enjoy the day. Enjoy the discount. My golly, we got a blue light special for anybody that isn't, that knows what that means. Buy it, but be smart about the buys. All right.